Hello guys, welcome back to yet another lesson, and in today's episode we are going to look into a new concept called moving average. And this one is an indicator. So what I'll be showing you how you can get to use these indicators, this particular indicator, to know where the market is about to go, and of course how you can get to use indicator, of course, to predict the move that the market is about to make. But before we get into that, if you're new to this channel, this is not the first time I'm telling you to just go ahead, make sure you hit the subscribe button, turn on the notification bell, so that you'll be part of this team. And as we get to learn together, as I get to share the information and the experience that I've gained over the years, you also get to know where to start and the right way, of course, to study Forex. So as I say, we'll be looking into these indicators. Technically, I just used two indicators. In our previous lesson, we talked about the RSI, the Relative Strength Index. That's one of the indicators I use, and also I get to use this other indicator, which goes by the name, it's called moving average. So with the moving average, it's not very complicated, since its main purpose, first of all, is to identify. It's used to identify the trend of the market. That's one of the main reasons to use that is the moving average. The other reason why you can get to use indicators is to identify or to know when the trend is about to change. So for this case, for instance, if we are in an uptrend and then the market wants to change the trend to a downtrend, you can get to know that by what the moving average is telling you. And with the moving average, let me just give you a quick illustration. Let's start with an uptrend and the moving average. So in an uptrend scenario, so the moving average, let's say the market is an uptrend. This is an uptrend scenario. So this is the market. So what you'll see with the moving average, if you get to look closely, and for this case I'm talking about 50 EMA, it's called the 50 moving average, since I normally use the 50 EMA. So it's important for you to take note on that. I normally use 50 EMA. Also, the other traders who get to use different EMAs, we have EMAs such as 20, we also have 30, and also of course we have 50 EMA. So for my case, I normally prefer using 50. So that's something you should take note, since it's something that I've tried. I've used it a couple of times, and of course it really worked out for me. And with the market and how I've been trading, I've really learned how to identify it, and of course how to incorporate it into the market. So with the 50 EMA, you realize for an uptrend, the 50 EMA is the 50 EMA. You'll notice that it's below the market, meaning for this case, we are on an uptrend. For the case of a downtrend, the opposite, of course, is the opposite of this. So for that case, you just need to, for this case, you'll see the market is moving down, and for this case, you realize the 50 MA is on the upper side, while this is the market. So for this case, you'll see that is the 50 moving average is above the market. So for this case, so long as the market is below the 50 MA, we should be looking for selling opportunities. And what we do, we also get to incorporate the trend lines. If you get to incorporate the trend line, we'll just wait for the market to touch the trend line, and then for this case here, we look for buy or selling. We look for selling entry reasons. So for this case, you get to look for selling. Selling entry reason. One of which we look for bearish engulfing candle. That's one. Two, we get to look for a double top. Three, we could look for something like we have the shooting star. And of course, number four, we'll be looking for the evening star. So for this case, it's important for you to understand these entry reasons when it comes to bullish or bearish entry reason. every time we get to address the market, you have seen me narrow down to this because it's very, very crucial. So for this case with the 50 MA, you just need to see whether the 50 MA is above the market. You look for selling opportunities. If the 50 MA, for instance, is below here, this is the 50 MA. For this case, you look for buying opportunity. Get to look for buying opportunities. So it's very, very crucial for you to have this in mind to avoid making silly mistakes, as well as also falling into a trap of trading against the trend. So it's important to know always, so long as you be following my teachings, I always trade with the trend. That's something I normally always focus on, since trading with the trend, it makes it easier, and of course it also gets to increase the probability of you getting the trade right, and of course making profit. So basically with the 50 MA, that's for the case of the 50 MA. There are people who get to use both 50 MA as well as 20 EMA as well as 30 EMA, but for my case, as I said, I prefer going with the 50 MA. So hopefully you make an effort to just make a follow-up on that. In case you have any questions, talk to me and I'll be happy to take you through that. So that's for the case of the EMAs, that is the moving average. And of course, by now I expect you have already hit the subscribe button, turn on the notification bell, so that every time I have a new episode, an episode like this one, you always be the first one to be notified. Till then, have a good time.